Welcome to Cashflow Diary, a podcast where we discuss business, money, real estate, and the sharing economy. As a full-time real estate investor, entrepreneur, and all-around problem solver, I have had the privilege of developing individuals into powerful business owners. And today, the focus turns towards you. Our mission is to help you build your real estate empire by leveraging strategies to grow yourself, your mind, and your wallet. Let's get started. If there's a system to even just doing the business part of your business when it comes to reporting your income and documents and all this other stuff to the I.R.S. You want to make sure that everybody's on the same page. And when everyone's on the same page, you tend to get the best results, because if you're trying to manage things, what are known as like your AGSI or your marginal versus your effective tax rate, and you want to keep as much of the revenue as you can, then you're going to learn to take advantage of the resources that are available to you, because you will learn that your cousin Vinny cannot do taxes the way that they often need to be done in order to give you the best advantage possible. So anyway, I've often said that one of the bad things, if you will, about this particular business model is the fact that it generates a significant amount of taxable income. That is the bad news. So you have to have a plan in order to deal with that. And part of that plan to deal with that is what we call phase 3, for sure. And making sure that you begin to build a tax-free income bucket. And then ultimately learning to take your profit account, your tax account, and these accounts to leverage those into other assets if you can, so that you just have more capital to play with. So let me say this differently. A different way of looking at this is, if you're following the profit first way that we've suggested, if you can get not your marginal, but your effective tax rate, say down to, let's say that if you say that you were able to get it to 0, and I know it sounds like, what? How is that possible? But what if you got your effective tax rate down to 0, literally meaning you're paying no taxes? Again, if you did that, now that much more money that you were allocating towards your tax account suddenly becomes allocated towards your profit account. And when it comes time to make an investment or build another business, or maybe participate in a limited partnership or a master limited partnership, or maybe you're a stock person and that's what you want to do, buy some more real estate, all of these things, they begin to work together, because as you own and control more real estate, you're going to get the benefits of that passive income, which, if you're looking at things properly and working with your tax advisor, you can continually minimize your taxable burden and or liability, so that you don't have to wonder about using things like qualified plans for the tax, for the tax deductions, etc. So again, it's part of the entire strategy from the beginning, is to help everyone own and control more real estate. And I believe, again, the easiest way to do that is to start by getting one short-term rental. That's why we call it phase 1. Phase 2 is learning to get many short-term rentals. So you take that 1, turn it into 10, maybe that 10 into 20, 20 into 30, etc. And then from there, as you're going through that process, if you are following the rules of profit first, you're building your profit, your tax account, you are managing things in such a way that you end up with maybe for the first time ever, you finally saved your first $5,000 on an annual basis. You're like, wow, I paid all my bills and there's money left over at the end of the year. This is kind of cool. Or maybe it's 10, or maybe it's 20, or maybe it's 40 or 50 or $60,000 that you've saved. And you're just like, wow, I cannot believe I did that. That's amazing. This is working. And that could become your measurement of success. And then you suddenly get a taste of, well, if I saved $40,000 last year, how can I save $80,000 this year? And that becomes a new measurement for you. All of those things then put you in a completely different position, to where when opportunity comes along, you're in position to take advantage of it, and you begin to change your entire situation as your life looks. So just know that that's that's the plan. That's my plan for you. Even if you don't have a plan for you, I do. And that's what it looks like. And then maybe ask your employer if they have a plan for you that looks anything similar to what I just said. My guess is that they don't, but I don't know. So I don't know your employer. So guys, it's been fun talking to you today. I look forward to talking to you soon. Till next time. Thank you for tuning in to the Cashflow Diary podcast. If you enjoyed this episode and you'd like to help support the podcast, please subscribe, share with a friend, and leave a rating and a review. If you'd like to keep the conversation going, head over to CashFlowDiary.com to sign up for our email list, as well as check out all of the links and resources in the show notes. Thank you again. Until next time.